What's going on, everyone? In this video, I'm going to show you guys how to lock in profits like a professional trader, because as we use our own money and we are trading these markets, even as retailers, we still need to be professional about it. This is going to boost your win rate. This is going to drastically increase your P&L at the end of the month, at the end of the quarter, the end of the year, and it's going to allow you to be able to trade the markets being less stressed, having more mental equity and capital, making you able to be able to profit more sufficiently. Now, these rules I'm going to pass along to yourself. These are rules that I have for myself. They've worked for many, many years. They allow me to be consistent. They allow me to keep my win rate over 60%, 65%, 70% sometimes even 80% when the market conditions are right. This is going to allow you to grow your account month over month. Again, so many new traders have no idea realistically where they should be selling stock or selling their options contracts, where they should be locking in profits, and how to actually do it over and over and over again. Okay, this is going to work in any market condition. This is going to work with any stock, any instrument that you trade, whether you're trading options, you're trading equities, you're trading crypto, futures, commodity, forex, it doesn't matter. So the first rule that we are going to put in place for ourselves, if you've been following me, you guys know that I love to scalp and I am a day trader. I'm going to be using the 20 period moving average, which is the 20 SMA. Now, if you're looking for the strategy, the exact strategy on how I'm using the 20 SMA, go to some of my previous videos where I kind of explain that. This video is going to be rule based on how you can exit the trade, lock in the profits, keep a high win rate. So on this particular trade, and I'm going to pull up a couple of stocks, that way we can go through a couple of different charts so you can see different examples as to where we would be getting out and locking in those profits. The first stock that we're going to start with is going to be Nvidia. Now we can see that Nvidia in the pre-market was coming from a small narrow state of the 20, 50, and 200-day moving averages. We are trading over the 20, 50, and the 200 in the pre-market. So automatically, we have to assume long bias. Until we start to break down and really close below the 20, the 50, and the 200, we really can't be thinking we need to short the market or the market's overextended or anything like that. We have to give the benefit to the bulls, and we have to go with the trend. So as you can see here, we put in a high in the pre-market of 278.50, and right off of the bell, we break this high. Anytime you start off the day, especially the day, you want to take the most amount of position sizing. So for example, if your max position size is 5 or 10 contracts, then we want to take those as early as possible when we are close to the 20 SMA, the 50 SMA, and the 200. For example, we do not want to be playing max size when we're trading way up here. And let me pull out my drawing tool, okay? So if this is the 20, the white line, the red line is the 50, and this is the 200. We do not want to be playing max size when we're this far away from the 200 and this far away from the 50, okay? What we want to do is have support. So we want to take our full position sizing when we're coming off of these levels, because we've got firm support on these levels. So we want to make sure we're maximizing our profits early if and when it is off the open. Now, if it just happens to be in the middle of the day where all of these moving averages are stacked, or towards the end of the day when all the moving averages are stacked, then we can go ahead and take full profits there or here, or excuse me, full position sizing there. But again, being that this came off the morning, we want to make sure that we're entering in max size and then scaling down later and later as we take more trades. So our first trade would have been on this candle here, the opening range candle, the first 5 minutes of the bell. I know taking trades that early scares some of you guys, but you guys have to understand, we are technical based traders. We are not emotional traders. We are not traders who just kind of go off of their gut, what they feel. We have to respect the charts. We do not also play our P&L, meaning we're not just constantly fixated looking at the P&L and letting that decide when we enter or when we sell. We have to just be technical based. So if we look at, okay, if we look at where we're entering in at 278.50, for this example, I'm going to say that we're just playing one contract, or we're playing one lot, right? Or two contracts. That way we can scale and then 1 position lot if you're trading shares, which is 100 shares. So our entry is going to be above the break of 278.50. We're going to get in on this candle. Now here is where it gets very, very interesting and where you can start to learn how to be more consistent and more profitable. We are going to take our first profits when the candles push 3 bars away from our entry. So if our entry is here, okay, if our entry is here on the first 5-minute candle, we can start to take profits 1, 2, 3 candles higher and away from our entry. You may be looking at yourself and thinking, wow, if we would have taken profits there, we would have missed the whole move. Yes, you would have missed the entire move. Doesn't mean that it would have been the only trade of the day. Maybe if your position sizing is 10 contracts, maybe you're done for the day. Maybe if it's 50 contracts, you're done for the day, or 5 contracts, and that's, you know, hitting your daily P&L, your mental P&L, your P&L based on your rules, then maybe. But if you just kind of look at how much profit that is, you're getting in from 278.50s, and we're taking profits 1, 2, 3 pushes away from the candle entry that we got into. So we would be taking profits at 280.70. Guys, this is a $2.20 move in a matter of 5, 10, 15, 20. How many of you guys would like to secure $2.20 in 20 minutes and do this 70% of the time, 60% of the time, 80% of the time? This is how we're going to start keeping profits in our pockets. This is how we're going to start growing our accounts. This is how we're going to start taking withdrawals. 3 pushes higher away from our entry is where we are going to start locking in profits. Now, if you are a 1-lot trader, meaning you trade 100 shares, you're going to want to make sure that you're at least scaling off 50%. So at this point in time, being up $2.20, you would have profited $120. You're going to continue to let that 50% run until we get a red candle close below a previous green candle. So what that would signify is the next in 10 minutes we get a red candle close. However, it is not below the previous green candle. Okay, so we would continue to ride our 50 shares or our last remaining contract if we bought 2 contracts. Again, we're going to let it ride. Green candle, 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 red candle, we are still in. Green candle, red candle close below a previous green candle. This is our exit. We would be exiting at a price of 283.82. So from our entry of 278.50 all the way up to a price of 283.82 is a 5-point total move. Now remember, we already sold 50 shares or 1 contract when we were up $2, so we've already banked in $100 to $120 on 1 contract or 50 shares. The last 50 shares from our first sell is going to go up another $3.82. So technically speaking, on your entire position, you are going to have made over $420, $450 on this move in a matter of 1 hour and 25 minutes after the bell. How many people, how many professions, how many jobs do you personally know where you can come into the market on this amount of size, which means 2 contracts or 100 shares, and make $400 an hour? What job pays $400 an hour? It's at this point we can decide to call it a day. It's at this point we can turn off our computer screens. It's at this point we can lock in a 100% 1 trade kind of done for the day mentality. It is at this point when we can be comfortable walking away from the screens. It's at this point when we start to get more consistent, when we come into the market and we do it again, when we come into the market and continue to extract money like this. So again, I'm passing these rules along to you. Please try them, use them for 30 days. You let me know how you do profitability wise, consistency wise. Again, this is going to save you from holding trades, being in profit, giving it back, going break even, being in drawdown, and then now holding a bad position adding to that bad position to get a lower price. So potentially if it bounces, you can make more money. And the next thing you know, it never does bounce and you never do come back to break even and you take a big loss. This is going to save your profits. This is going to make you consistent. This is going to put you on proper setups over 65-75% win rate. Yes, at times your profit's not going to be huge. You're not going to be getting those 1,000% gainers that you see on social media. But we don't care about that. What we want to do is be consistent. What we want to do is come into the markets each and every single day and collect a paycheck. What we want to do is be a disciplined trader. We want to be professional. We want to treat our money with the level of professionalism so that we can be in this business for the next 5, 10, 15, 20 years. That's what it's all about. It's not about trying to come in here, go max size, leverage our full portfolio on one particular home run trade. What we are trying to do is do this in the market each and every single day. And we can do it each and every single day. Before this video gets too long, I know I was going to show you guys a couple of stocks. Let me just show you another one. Let me just show you Tesla. Let's pull up their chart really quick. Let's take off the previous lines. Let's do the same thing. Let's go, baby. So if we're looking at this, we are coming from a narrow state, meaning the 20, the 50, and the 200-day moving average in the pre-market are all stacked above it. You can see our pre-market high is sitting at 164.03. I know this already, the lines on my chart, because I personally played this on Friday. So as we break 164, this is the candle we want to get in on. We want to get in on that break as we start to push away from the 20-period moving average, which is the 20 SMA. Again, we want to take profits 3 pushes higher than our initial entry candle. So if this is our entry candle, we're going to be taking profits 1 push, 2 push, 3 pushes higher. These red candles do not signify anything because it's just a red candle. Red candle never closes below a previous green candle, so we stay in the trade, and when we get that 3rd push higher, we can now start taking half size, or you have the privilege of taking all of your money off the table if you choose. But again, it just means that we can start selling for profits and locking in those profits, because now it becomes a free trade because our stop loss goes to break even. We cannot lose money on this trade. So we would have gotten out of this trade at 167.10. Our entry is at 164, the break of 164 minus slippage, 164 and some change. We took another $3 on this potential move in a matter of 30 minutes. $3, 30 minutes, call it a day, sell your entire position, sell 50%. And again, continue to ride the position if you sell half until we get a red candle close below a green candle. So in this case, we would have pushed up here, 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 red candle, green candle, red candle, green candle, red, 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 candle close, green. Where is our first? Here is our first red candle close below a green candle. We would have essentially got out of this trade at 168. So we would have squeezed another $1.20 off this potential trade. That's a 4-point move in a matter of 2 hours. $4 move in 2 hours. Guys, if you were playing one lot, even just 100 shares, if your account size is 25,000, you're leveraged, you can do this. You can play one lot on Tesla, okay? $400 in 1 hour. If you're playing 2 options contracts, you're looking at the same kind of price, right? 300, 400, 500, depending on the way the options premium is moving. But you would have made hundreds of dollars in an hour, and you would have been able to do this with no stress. You would have been able to do this with ease. Take this advice, use these rules to your benefit. Remember, when we get in, we want to get in close to the moving averages, pushing off of the 20 and 50 SMA, away from the 200. We want to start taking profits. 1, 2, 3 pushes is when we first start taking those profits away from our entry. And then if we do not sell the entire position, I will be fully transparent. I sell my entire position a lot of the times when I get more than $2 on a move. So in this case, when you get $3 on a move, I'm out 100%. Sometimes I'll leave 1 contract left. I play 10 contracts of Tesla. I play 10 contracts of Nvidia. That's my normal position sizing. So I will sell 8, I will hold 2. I will sell 9 at $3 and I will hold 1. And then I will use the same mantra, get the extra $1. Again, I'll see you guys on the next video. If you want to join the Discord, that link is down in the description box below. Also, make sure if you guys want one-on-one mentorship and coaching and my strategy guides for my entire system, visit evolutiontraders.com, and I'll see you guys all next time.